Here's a number that should stop you in your tracks. The average American loses over $182,000 in lifetime Social Security benefits simply by claiming at the wrong age. That's not a typo, my friend. $182,000 gone forever because of one single decision. And here's what really breaks my heart. Most seniors make this choice without understanding what they're giving up. They walk into the Social Security office, sign some papers, and unknowingly lock themselves into decades of smaller checks. Today, I'm going to show you exactly when you should claim your benefits, whether that's 62, 67, or 70. We'll look at real dollar amounts specific to your situation. Stay with me because this could save you thousands of dollars. Let me show you exactly how much money we're talking about here. If your full retirement age benefit is $2,000 per month, claiming at 62 cuts that down to just $1,400. That's a 30% permanent reduction. Every single month for the rest of your life, you'll receive $600 less than you could have. Now multiply that over 20 or 30 years of retirement. We're talking about losing well over $100,000. And it gets worse. Those smaller checks mean smaller cost of living adjustments too. When inflation hits and prices rise, your annual increase is based on that reduced amount. So the gap between what you're getting and what you could have gotten grows wider every single year. The Social Security Administration reports that nearly 40% of Americans claim at 62. Now let's look at the other end of the spectrum. If you wait until age 70 to claim, you receive a 24% bonus on top of your full retirement benefit. That $2,000 benefit becomes $2,480 every month. That's an extra $480 hitting your bank account month after month. Over a 20-year retirement, that adds up to over $115,000 in additional benefits. And here's what most people don't realize. Only about 6% of Americans wait until 70 to claim. That means 94% of retirees are leaving money on the table. The math is crystal clear. For every year you delay past your full retirement age, you get an 8% increase. No investment in the world guarantees you 8% annually. This is guaranteed money from the federal government. So what exactly is your full retirement age? This is where many people get confused. If you were born between 1943 and 1954, your full retirement age is 66. Born in 1955, it's 66 and 2 months. For each year after that, it increases by 2 months until you reach those born in 1960 or later. Their full retirement age is 67. You can find your exact full retirement age by visiting ssa.gov or calling the Social Security Administration directly at 1-800-772-1213. That's 1-800-772-1213. They're available Monday through Friday, 7 a.m. to 7 p.m. local time. Write that number down right now. When you call, ask them for your personalized benefit estimate at ages 62, full retirement age, and 70. Let me walk you through the break-even calculation, because this is how you make this decision logically. The break-even point between claiming at 62 versus 67 is approximately 78 years old. That means if you live past 78, you would have been better off waiting until 67. The break-even between 67 and 70 is around 80 to 82, depending on your specific numbers. Here's the reality check. The average 65-year-old American man today will live to 84. The average woman will live to nearly 87. That means statistically, most of you watching this video will live well past these break-even points. If your parents and grandparents lived into their 80s or 90s, your odds are even better. Waiting to claim could put tens of thousands of extra dollars in your pocket over your lifetime. Now here's when claiming early at 62 actually makes sense. First, if you have serious health issues that will likely shorten your life expectancy, taking benefits early could be the right choice. Second, if you're in desperate financial need and have no other income sources, early claiming prevents hardship. Third, if you have a much younger spouse who can claim spousal benefits and later switch to their own higher benefit, there are strategies that might favor early claiming. Fourth, if you plan to invest your Social Security checks and earn returns that beat the 8% annual increase. But be honest with yourself about this one. Most retirees don't actually invest their benefits. They spend them on living expenses. Talk to a financial advisor before assuming you can beat that guaranteed 8% return. Here's a strategy most people overlook. If you're married, you have options that single people don't have. Let's say one spouse earns significantly more than the other. The higher earner should almost always delay until 70 to maximize that benefit. Why? Because when the first spouse passes away, the surviving spouse keeps the higher of the two benefits. So that delayed larger check provides protection for whoever lives longer. Meanwhile, the lower earning spouse can claim earlier to provide household income while the higher benefit grows. This coordinated strategy can add hundreds of thousands of dollars to your combined lifetime benefits. Before making any decisions, married couples should create my Social Security accounts at ssa.gov for both spouses. Compare your benefit estimates and plan together. This is not a decision to make alone. What about the earnings test? This trips up a lot of early claimers. If you claim benefits before your full retirement age and continue working, your benefits get reduced if you earn too much. In 2024, if you earn more than $22,320, Social Security withholds $1 in benefits for every $2 you earn above that limit. Here's an example. Say you earn $32,000 while receiving early benefits. That's about $10,000 over the limit. Social Security would withhold $5,000 from your annual benefits. Now there's good news hidden here. Those withheld benefits aren't lost forever. Once you reach full retirement age, your benefit gets recalculated and increased to account for those withheld months. But many people don't know this and panic when their checks shrink. Let me give you specific action steps right now. Step 1. Go to ssa.gov and create your My Social Security account if you haven't already. It takes about 10 minutes. Step 2. Download your Social Security statement showing your estimated benefits at 62, full retirement age, and 70. Step 3. Calculate your break-even age using the free calculator at ssa.gov/planner/life expectancy. Step 4. Gather your health history and family longevity information. How long did your parents and grandparents live? Step 5. Schedule a free appointment at your local Social Security office by calling 1-800-772-1213. They can run personalized calculations for your situation. Do not walk into that office unprepared. These action steps put you ahead of 90% of Americans making this decision blindly. Now let me warn you about the biggest mistakes I see seniors make. Mistake number 1 is claiming early just because you can. Many people think free money is free money, might as well take it now. But every month you claim before full retirement age costs you permanently. Mistake number 2 is ignoring your spouse's benefits. Your claiming decision affects your spouse for the rest of their life too, including after you're gone. Mistake number 3 is not considering taxes. If you have other retirement income, up to 85% of your Social Security can be taxable. Waiting to claim while spending down taxable accounts first could reduce your lifetime tax bill significantly. Mistake number 4 is trusting bad advice from friends or family members who don't understand your specific situation. What worked for your neighbor might be terrible for you. Here's mistake number 5, and it's the most heartbreaking. Believing you can change your mind later. Once you've received Social Security fits for 12 months, you cannot simply undo your decision. There's a little-known withdrawal option within the first 12 months where you can repay all benefits received and start fresh. But after that window closes, you're locked in for life. The only exception is if you claimed early but haven't reached full retirement age yet. You can suspend your benefits to earn delayed retirement credits, but you cannot get back those early reduced checks. This is why I'm begging you to take this decision seriously. Don't rush, don't guess, don't listen to what your brother-in-law thinks. Get your personalized numbers and make an informed choice you'll be comfortable with for the next 20 or 30 years. So here's the real answer you've been waiting for. The best age to claim Social Security depends entirely on your health, your finances, your spouse, and how long you expect to live. For most healthy Americans with average life expectancy, waiting as long as possible up to age 70 puts more money in your pocket over your lifetime. But your situation is unique. Now you have the tools and knowledge to make the right choice. Remember those action steps. Create your My Social Security account, get your personalized estimates, and don't make this decision alone. If this video helped you understand your options, please hit that subscribe button right now. Next week, I'm covering how Medicare costs can eat into your Social Security check and what you can do about it. You won't want to miss that one. Until then, take care of yourself and God bless.